Hello, class. How we doing today? Testing out a new camera that I got. Let me know what you think. Also, I need to check the audio. Let me know how the audio is, please, before we get started in the next couple minutes. How are you today? How's everyone doing? Hello, Margaret. Morning. JT, nice and clear. Awesome. Cool. How's the video? Perfect. Perfect. Cool. Taylor, very clear. All right. Nice, nice. Yeah, man. Oh, this looks clean. I like it. I like it. Hello, Khalid. How are you? Matthew. Okay, good morning, everyone. So, God bless you. Hope you're having a wonderful day. Just figured I start doing some live streams during the day, accommodate my early birds. So good morning to West Coast, because I know it's probably like 9 a.m. over there. Good afternoon on the East Side. It's around brunch for Central Time. All right. Cool. Everyone is good to go. Good to go. Now, hey, Mr. Ronald, how are you? Good afternoon. We're gonna get started in a couple minutes here. Let everyone take some time to get your notes together, get your questions out, because we're gonna be doing some work today, interactive work. All right. Firstly, I would like to answer two specific questions that I asked everyone to go ahead and comment on the other video that I did talking about today's live stream. And it looks like we have Javier. He says he got a line of credit for 20,000. All right. The bank is offering him $3 per every 1,000 borrowed insurance in case something happens to him or he loses his job. His question is, have I ever heard of this, and is it a good idea or a waste of money? So my question back to him is, no, I've never heard of that. I think that's kind of cool. So I pay $3 for every 1,000 borrowed. Do I pay that per month? That would be my number one question. Is that per month? Am I paying this insurance protection on this line of credit? Or is it like a one-time thing? And then I would have to figure out, like, all right, what would happen if I lost my job? Are they saying that I won't have any payments? That they'll prolong, the payment thing? Or will they take care of the debt? If they take care of the debt, then I might look into that. But if it's one of those things where, hey, we'll just put it on hold, I don't see a purpose in that. I don't know if I would want that. What do you guys think? Okay, Javier is with me. So he says, yes, it's per month. All right. So it might be a little bit of a cost there, because remember, we're doing velocity banking where we're stripping quite a bit of money out to go, pay off debts. So I don't know, man. Also, find out for me if I have, let's say, the whole line of credit outstanding and I lose my job tomorrow. Will they cover the whole thing? Or is it more of they'll just prolong it? Like they'll be like, all right, we won't charge you any interest until you get a job or something like that. All right. Honestly, I don't have anything like that. I don't know if I would pay for it. Kind of sounds like an overdraft protection on your line of credit. That's kind of like what it sounds like for me. Yeah. Margaret says bank wins. Well, they always win, right? We're just a part of their system. We're trying to learn this freaking velocity banking thing so we can get ahead of the game, right? All right, so let's see. The other question was, let's see. Rich, I think, just has a comment. He says, I think if more Americans did velocity banking, everyone would owe a lot less money, which would be great for the economy because there would be more money being spent. After rethinking this, not everyone can handle this strategy. If you overspend or have no cash flow and always live beyond your means, nothing will help you. I can agree with that. They would just max out the line of credit and then complain about velocity banking doesn't work. LOL. I agree with you on that, Mr. Rich. All right, Mr. Cruz says, I don't know if you're with us, Mr. Cruz says, let's see, his question is, would you acquire or try to acquire a debt weapon even though you have 2 credit cards within 25 to 30% current utilization, credit score anywhere from 690 to 740, with a DTI, debt to income ratio, of 55 to 60%? My simple answer, yes, of course. Why wouldn't I obtain a line of credit? Remember, credit cards are only good for so long. Okay? Credit cards are only good for so long. You know, they're not as powerful as like a HELOC, where it's so much bigger, or a personal line of credit. Like, we can really do more damage over the long haul. I think credit cards have their nice, for me, the way I use my credit cards, like I said, it's for my day-to-day stuff, day to day. You know, I just run it up, pay it back, run it up, pay it back, get the rewards, get the cash back. I'm happy, leave me alone. Give me my 0% anywhere from 12 to 24 months, and I'm happy. Okay? So, what I would like to discuss, all right, is what I mentioned in the video prior. All right, so I hope you've got your questions ready because it's going to be very interactive. I have my numbers on the board. These are my numbers for this month. Okay? Kind of showing you where I'm at on the velocity banking timeline. Not only are we going to be going over the numbers, but we're going to try to answer some things that I'm sure you guys go through, right? So I want to make this as engaging as possible. So bear with me. I'm going to go back and forth, looking at the comments and diving into it. So one of the main questions that I had for myself is, okay, what is the current state of the economy, US economy right now? And how does velocity banking, help us? How can it continue to help us? What are some things we need to be aware of? Some things we need to be on the lookout for? Okay. So I'm sure all of you know that, we got a government shutdown right now. So there's going to be a lot of government employees that are, I guess, not collecting a paycheck. So if we remove this, does velocity banking work? Number one. All right, I think that's a very easy answer. It's no, okay? And it's also kinda, but not for long. Okay? So if I'm making this much per month and I work for the government, and then government shuts down for like 2, 3 weeks, and now I'm working for free and my income goes to zero, well, what's nice about velocity banking is it can buy me time. It can buy me some time for right now. So if I have a line of credit, so this is me, personal line of credit, 10K, that's my interest rate. I got a zero balance on the line of credit. If anything happens to my income, then I'm going to tap into the line of credit to just pay expenses of 3,000. I'm not going to try and chunk at anything if I don't have income coming in. If I don't have income coming in, then my cash flow gets wiped out as well. Okay? So I want to make sure that when we're doing velocity banking, if the worst happens, the worst case scenario happens where you lose your job or something goes down, an emergency happens, okay, whatever it may be that will affect income and cash flow, my suggestion would be put a halt on the whole velocity banking thing. Just put a halt on it. Hold on. and just go back to paying minimums and trying to find another job or find another source of income to kind of get you to where you need to get to. All right, I've got a personal experience this with myself. Back 6, 7 months prior, when I lost my job, income went to zero, but I had the line of credit. I actually had a $5,000 line of credit, and I immediately went to the bank, increased it to 10K to buy me 2 months worth of expenses. And then here we are today, because of everyone here that's supporting the channel and all of my loyal Patreons working with me one-on-one. Look what you guys managed to do. Look what position you put me in. I was making less than that per month salary. I was making 35K salary. Take home was like 2,100 per month. I was getting basically 1,000 every 2 weeks. That's peanuts, right? And then look, almost triple. And by the end of this month, we'll make 10K. I was looking at the numbers. I'm gonna have my first 10K month is this month. And you know what? It's all thanks to this guy right here, Mr. Grant Cardone. If you don't know him, it's part of the 10X movement. All right, he's got a strategy. It's called the 10X rule, and it is powerful. Okay, there's one book that I'd recommend that you go grab, 10X rule. Okay, you start reading that. All right, it goes great with people who are trying to increase their spiritual life, their physical life, their mentality, their way of thinking. Impeccable. The strategy itself, impeccable. And then with the mix of this, velocity banking, huh, oh my, oh my. All right. So here's something that I also want to cover, because I get a lot of questions on this as to, okay, when exactly should I chunk? Like, what exact date should I make the chunk payment? All right. So let's use this example right here. Here's the income. Here's the expenses that I have. Here's my debt, $9,500. Okay. All of this debt right here is credit cards. All credit cards on 0% credit cards. So they're temporary. They're all going to expire somewhere this year, 2019. Here's my line of credit, 10K, zero balance. All right. Here's my cash flow. All right. I lowballed myself. All right. If you did the math, lowball myself on the cash flow, which is what you should always do, is lowball yourself on cash flow. You should overestimate on expenses. Okay. And you have this cushion, you got this space. All right. And we're going to talk about that space a little bit later. So here's the scoop. I got this $1,700 credit card that's on 0%. It expires next month. So 1,700 there. All right. Got a vacation that I'm going on in February. It's gonna cost us about maybe $1,200, $1,500. My girlfriend's birthday. All right, got to do something, right? Got to make the lady happy, right? So we got that going on. And then March, April, just 2 months later, we got this debt right here, $4,117, 0%, expires in April. What do you guys recommend I should do? I got these debts right here. Like, take a look at them. All right, we got another credit card, $3,300, expires in September. And then we got one for $1,600, expires in November. Okay. Now, mind you, here's some of the things that I have in place already that I want you to consider. All right, which is the system. Got the system in place. We got our income. All right, goes into my checking account. All right, like I always say, look, we're not paying bills from the line of credit per se. It's coming out of the checking account. All right, so you know what I do to separate my money so I never get confused is I always go like this. Got my little savings account, right? So when I get my money, it goes into the checking, and I determine how much money I gotta put in the line of credit. It's usually almost all of it, because naturally you have an outstanding balance because we're doing velocity banking, right? Okay, well, in this situation right now, I've got nothing owed on the line of credit. It's at zero. All right, here's the scoop. I've got 2K in the savings account, got 1,800 in the checking, and then I got another 300 cash. Okay, so that's where all the current cash on hand is. I pretty much paid all my bills for this month. The only things that I have left is food, gas, miscellaneous, phone bill, which is 140, and then I got my life insurance premium, my life insurance asset, 529. Okay, so that's here, and that's on the 28th. That's when that's due. So what would you guys do if you had this going on? You got these debts to worry about. You're trying to go on a vacation. You want to make sure you don't affect the velocity banking by spending too much on vacation, right? We got to set the budget. All right. What do we do? Let's see. Rich says pay the 17 and the 4,100 with the line of credit. All right. Then put your vacation and other expenses on the credit card. Cool. 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 All right. I kind of like that idea. Does anyone else have any suggestions on what you think I should do here? EA is asking, which camera did I buy? It was a Logitech 1080. Thing is solid, man. You can see every curl. Love it. All right. So Mr. Cruz, no, Mr. Rich. Bethany says I would pay the 1,700 only and wait until March to pay the 4,100. Okay. We're on the same page here. I like what you're talking about. And since it's at 0%, vacation expenses still on the open credit card. Okay, I like it. I like it. Macy's like $6,600 chunk, pay the 17 and the 41. All right. Emmanuel, 1,700 the limit or owed? This is owed. Owed. All that is owed. I would use one of the 0% credit cards, probably the one in September. Okay. Denzel, do you record the live stream for subscribers that missed the live stream? Would be so great to catch up when off work. Yeah. Yeah. At first, I have it like private. Like once it's done, it'll be private, and I post it on my Patreon. Allow everyone to see it there, and then I'll make it public again like a couple days because I might want to like edit it or make some tweaks with it or whatever the case may be. All right. Crew is saying 2K from saving, pay off the 1,700, move the 41 to the line of credit. Your income expenses does not match your cash flow. Duh, because I like to lowball myself. You should be able to pay the 41 off in 1 month. All right, here is what I am planning on doing based on what you guys just told me. Is I like the idea of just doing this. Taking the 17, let me just wipe out the 17. We're in January. Let me just wipe out the 17. I don't think it makes sense for me to take this 4,100 and create a debt on the line of credit where I'm going to pay 15.99%. I don't know if I want to have that cost of borrowing money. Okay. So I'm kind of leaning towards money on hand. All right. Because in this case, I don't have a lot of debt. Right. If there was a couple more zeros there, then definitely I would be pulling from the line of credit. I'd be doing what Mr. Macy says, take the $6,600 chunk, keep this bad boy going. But when you're approaching debt free, all right, understand that the line of credit may become obsolete, where it's going to start to cost us money to pay off little things. What usually happens over the long haul of paying off all your debt is you begin to have some freaking cash flow built up, right? So we've got money here, we've got money here, we've got money here. Instead of borrowing, okay, what I'm thinking in my mind is let me just throw this cash, right, here for right now, and let me use the line of credit for something else. Okay, let me use it for something else. What would make more sense? Remember I was telling you about this policy right here? How I got this coming up, this 529? Okay, I think what I'm going to plan on doing is either number one, I'm going to use cash to just pay the line of credit, but that might compromise a rule that I have, which is never use cash. Always leverage, always leverage, always leverage. Right? But in this situation, when there's not a whole lot of debt and you've got a zero balance on your line of credit, so basically your line of credit's paid off, you know, rules might change a little, just a little. Don't get crazy on me, just a little. Okay? But what I'm thinking in my mind is I got this asset that I've been building for the past 6 months. What if I chunked at the asset and increased my cash flow by 529 for the rest of this year? Hear me out. So if I was to take 6K, right, out of the line of credit, if I was to take 6K out of the line of credit and then do what? Chunk at the asset, okay? Pay that thing off, increase my cash flow by 529 for the whole entire year. 529 times 12, that's a little over 6K. Yes? I just chunked 6K and I'm going to cash flow 6K. I've got an offsetting effect. At the same time, what's really cool is this 6K is going to do what for me? It's going to go in the policy, which is going to make me anywhere from 4 to 6.5%. All right. And if I'm doing velocity banking properly, then what should I do with this money? All this money. I should drive it to the line of credit, right? To offset what? This. We got to offset that so that this makes sense. Yes? With me? Okay. And if I were to do the math, how long would it take me to zero out this 6K with cash flow as low as this and income as high as that? According to quick synopsis, 2 months. 2 months. And then guess what happens? Oh yeah, we come right here. April. Right? February, March. Come into April. This debt is gonna be probably around like $3,900 because I pay 100 a month there, I pay 100 a month here. This one is like 50. Okay. So talking about the trip has already been paid for. Okay. Only thing I got to worry about is when I'm actually there. And I can use some of my other credit cards that have a zero balance on it. Or I was even more slick and I said, hey, honey, uh, go apply for a unsecured credit card with 0% interest for 6 months. We found Discover. And I said, hey, since you're a student, okay, you can get 5% cash back on everything that we spend when we go on this cruise to the Bahamas and back. Not bad. Not bad. Okay. So that's taken care of. All this money's goes into line of credit. End of the month, gonna make my income. Comes right back here. Line of credit. Right? It did its chunk already. Income went in. Now more money's got to come back out to pay for expenses. And then in a matter of less than 4 or 5 months, I can increase my cash flow another $100 for a total of $629 increase in cash flow over the next 4 or 5 months. Does that make sense? Are we lost? Anyone lost on that? Okay. Let's see. Mr. Ramirez, how are you? Joel, I wouldn't go on vacation till I was out of debt. Yeah, I agree with you. But you got to listen to what the woman says, right? Can't get away from that. Corporate HQ, it's the finance geek. Let's go. Great job. Thank you. Emmanuel. It's Oregon. Line of credit into cash value. Life insurance, that's where it builds to invest in real estate. Yes. The good thing about this is that you adjust it to whatever suits your situation. With that cash flow, they're going to need a bigger policy. All right. Cruz should be investing in real estate ASAP. Yeah, look what I wrote. Investing, real estate. Okay. For right now, what I'm doing with all of my excess cash flow is what Uncle G says. He says to build it. He says get to $100,000 cash before making your first investment. Get to 100,000 cash. How fast can we get to 100,000 cash? Well, if I'm saving money, earning 4 to 6.5% or higher, that's cool. And then if I get this sustainable business going, which is going to give me profits, I'm going to gain knowledge, I'm going to establish my kingdom authority here on earth. Okay, I'm going to position myself to then what? Invest in real estate. So here's something I want to give to you guys, and then we're going to kind of cover the economy. You know, we talked a little bit about this government shutdown thing. If you don't know what it is, I'm not sure if I can help you that much. We can do some research together. It's really not that difficult. Basically, Congress, Senate, they're not getting along. President shuts things down. People don't get paid. People get mad. People get upset, right? It's a money issue. Everything's always a money issue. It's never a political issue. It's never a personal or a religious issue. It is always the money. Okay? It's always the money. When you figure that out, oh my goodness. You can solve so many things. It says it in the scripture. It says it in the written word. It says it in our constitution, man. Got to learn it. So here's a scenario for you. All right? Which is kind of really just going over how I want you guys to like keep continuing to think about your money as we get out of debt. All right? So in terms of the economy, where we're at. Listen, velocity banking is not going to go anywhere anytime soon. My theory is that velocity banking is going to be around for a good 40 plus years unless this Bitcoin thing really pops off in the next 15 years, or something happens with blockchain, or if we switch to a worldwide currency. If we switch to a worldwide currency, then the game might change a little bit. The concept of velocity banking will stay the same. It'll stay the same. But the tools that we use might change, right? They might. That's kind of like what I'm seeing. But in terms of velocity banking itself, which simply means leverage. Whenever you hear velocity banking, just think leverage. Leverage. So for all the new people here, if you're stumbling across this concept very first time, you're still contemplating whether this thing is right for you or not, just think leverage, okay? The concept of leverage is as old as Pharaoh, all right? Very old. Credit is very old concept. Nothing new about credit, all right? It's something that will always be there. If you know how to manage it, we get the results that we want. If you don't know how to manage credit, get away, stay away from it, okay? Do what Dave Ramsey says, all right? And just cut up all the credit cards and be done with it, all right? Because that's usually my advice to those people that are like trying to argue with me on whether this thing works or not. I'm not here to argue with anyone. I'm not here to convince or persuade. I'm simply just showing you millennial perspective based on what I've seen parents and adults do. And after talking to over 150 households with the average age of 40 and up, I'm like, what are we doing? What are we doing? We got to get this thing together. Okay. So let's see. Next thing I want to cover, I want to give you guys an idea, kind of like what I'm thinking in my head. But I want to do this very interactive thing. Is I want to cover not only the history of velocity banking, but I also want to cover the future of velocity banking, which is this ultra FICO score. Okay, has anyone done their homework on the ultra FICO score? Okay, if you haven't, I'm going to put a link right now in the comments, okay, where you can read up on it and you can get this thing going and learn it. I would suggest putting your information in, submitting a request to get more feedback, get more information on the ultra FICO score. Okay, it's not out just yet. I think it might be in like beta or something like that. I'm not too sure. But the whole idea of the ultra FICO score is so that we can leverage our savings accounts, our money market accounts, and our checking accounts, our cash accounts. Basically, they want you to submit, you personally submit to this ultra FICO score, your savings account, your money market, your checking account, and they evaluate it. They say, all right, has this man or woman been managing their cash properly? Okay. Would you agree that if we're doing velocity banking, where we're not only wiping out debt at a record rate, but we're never losing our cash flow in the process, where do you think that cash flow is going to be at, other than the line of credit and other than your life insurance policy? It's going to be right here, right? Right? Would you agree that when I'm working with, for everyone in here that that you guys are on my tier 3 level or tier 2, you know how when we're talking, I never compromise savings accounts, retirement accounts. I never compromise them. I simply redirect, but I don't compromise. What I mean by compromise is if I'm talking with a family that has, 10K in savings, has a 401k and a ta and all that stuff, I never pull from the original 10K. I simply say, hey, whatever you were contributing to each account, I'm simply saying to cut it off. Just cancel it. And let's do velocity banking because I can make you way more money in that sense. All right. So let's see. Ultra FICO score is very, very effective for us. I think it's going to help us out a lot. Okay. If anyone knows Dave Ramsey, he has an article that came out recently talking about the ultra FICO score. He calls it ultra ridiculous. Okay. I'm going to read you some of his stuff. He says, if you've been around his website, okay, if you're on the Dave Ramsey crowd and whatnot, the idea is we hate credit. Okay, they hate credit. They don't like to touch it and do nothing with it. All right. And he's saying that the ultra FICO score is stupid. It's a way to keep people in the debt cycle. Okay. He says that a credit score does not show how well you're managing your money, or even if you have a dollar to your name. Instead, it's really just a score of how well you can play the debt game with the bank. More like an I love debt score. Okay? I would agree with this guy on certain notions, which is he's right. The credit score really is just a score. It's got nothing to do with anything else. It's just a score, and the banks say, "Oh, okay, cool." They look at the score. But what they really look at is the management of how you're using your money. This is why some people get approved and some people don't. You ever wondered, some of you that have these 750, 800 credit scores and can't get a line of credit for 20,000? Yet I get another family with a 700 credit score and they get approved easily, simply because that family seems to be managing their debt a lot better than this family. They've got a perfect credit score because they pay all their bills, but they don't really pay off debt, right? So that's on them. And he goes more into the difference between the ultra FICO and the current scoring system of FICO. The current system that we're under, that banks are currently using, is FICO 8. And technically we're on FICO 9. There's a FICO 9 out, but nobody's using that. Everyone's still using like FICO 8. Okay? And that is just looking at your credit lines or trade lines if you're in the business or something like that. Whereas now they want to look at your money because they want to, the banks, you have to look at it from the bank perspective, okay? They've been giving out mortgages and auto loans to all these prime lenders, okay? But that's all dried up. It's all dried up right now. Now they want to go after the subprime lenders. It seems like they like to repeat 2008 again. I don't know why they would want to do that. But I can see it from the bank's perspective. They'll make a ton of freaking money again. All right. Unfortunately, a lot of Americans going to lose their homes all over again, and we're going to go in this cycle, right? So if you want to be either on the bank side or just be out of it completely, you ought to look at this concept. You ought to get this thing going for yourself. You ought to start really, really discovering the necessary things that you need to do with your money and how we can leverage it. Okay. So that's covering FICO. I would highly suggest everyone, especially if you're already doing velocity banking, this is going to help you. It's not going to hurt you. It's going to help you. In my opinion, I think it's going to help me. I already put my information in. I want to be one of the first people that they start looking at my cash accounts, because they're going to be like, oh, wow. One day he's got 10 grand in the account. Now it's 5. Now it's 10 again. 5, 10 again. 5. Like, he never goes to 0. Doesn't have any non-sufficient funds. He's got a savings. He's got a this, a that. Okay. Let's see. Any questions on what we are discussing here? Let me scroll back up. Cruz, if you acquire a line of credit with a bank or credit union, will you still use your credit cards considering you have 5 or 6 with very low balances? Yes, I have a line of credit and I still use my credit cards because of the 0% and the cash rewards. I mean, that's a no-brainer. The banks want access to your personal accounts. They want passwords to get in. Shake my head. Dude, they already have your password. What are you worried about? All right. These banks got all your information. Your information's out there, whether you like it or not. It's out there. Right now, everyone's being hacked. Okay, there's no getting around it. That's the world we live in right now. Best thing you can do for yourself is get your money right. You never have to worry. Something happens to your money, to your identity, you'll have the money to cover that. All right, you go with companies that have these identity theft protection and all that good stuff. What are you worried about? Let's see. You can still use credit cards if you want to earn whatever perks they offer. Yep. Yep. What about the chocolate trade as a measurement for market health? Whoa. Chocolate trade? What are you saying? I don't know what that is. Educate me. Educate me, Miss Mash 215. Corporate HQ. Yes. Homework on Ultra is on, sir. Have you heard any info if lenders will adopt the model for lending purposes versus their current models? Or what types of lenders may be primary users? I know it's early. Yeah, so for right now, I doubt any bank is gonna adopt Ultra FICO score like right away. They've got to work out the kinks first. I think it's still in beta. I think it actually drops like halfway into this year, towards the end of the year, and it's going to be like an option. It's not going to be a requirement. It's going to be an option. So let's say you and I go apply for something, you get approved, I get denied. The bank might come back to me and say, hey, we will reevaluate this if you submit an Ultra FICO score to us, where you give them access to look at your accounts, to look at your cash accounts, and they'll say, all right, this guy's pretty liquid. Let's give him the line of credit that he was asking for because he's pretty liquid already. That's how I believe that's going to work. All right. Let's see. Corporate, that is key. Pay no interest. Okay. Let's see. Questions. Oakland, but if they are compromised from hacking, what will happen to my accounts they have or had access to? I don't know what you're saying, man. You seem nervous. Ain't nothing to be nervous about. Just don't give your password to anyone. Don't give your information over the phone. You'll be fine. By what time would you would have a hard inquiry, Cruz, on what? They already have background systems that rate you on cash flow. Denzel's concepts are true to form and are in fact real. This is how they decide on what limit to approve you for loans partly. Thank you, sir. Isn't the Ultra FICO an option for the borrower? Yeah, so I just covered that. Yep. It's we're good. All right, my checking is always 0 since I use the line of credit. Would they look at the line of credit as my cash? Well, remember, yeah, we're dumping all our income into a line of credit, but you're not at 0 forever, right? So I think what they're going to be doing is they're going to look at it over the monthly period. They're going to be looking at your average daily balance. Now, you're never going to have an average daily balance of 0 because you have to keep money in there to keep paying bills, right? And then as we pay more and more and more debt off, you're going to have this situation where you've got the line of credit zeroed out and you've got cash and you got your policy rocking and rolling and you got your business. You're just going to have like cash going on everywhere. And you just want to be able to keep the flow going. You want to keep the flow going. So that's why I think the best flow for me over the next couple months is to go ahead and take the line of credit, chunk at my life insurance policy, right? Earn interest on that, store money tax free, keep storing money tax free, okay? And then do my best to keep 10xing my income so I never have to worry about money ever again. And I can become an even bigger cheerful giver to my community. Keep doing live streams like this day in and day out, day in and day out, example after example, concept after concept until yous get it. Okay? Let's see. Let's see. What do they consider as far as debt to income ratio, especially to acquire a line of credit? Which is faster to acquire, a HELOC or personal line of credit? Can I have both with different banks and use simultaneously? Yes to the last question. You can use a HELOC and a personal line of credit simultaneously. I have people that do that. That is okay. To answer the first question, what do they consider as far as a debt to income ratio? I'm not 100% educated on that, honestly, because I've never looked at the details. I just simply do the concept, and then when I want something, I apply, and I've never had an issue getting what I want in terms of credit. Okay? Third thing is you said, which is faster, to get a HELOC or personal line of credit? A personal line of credit is by far the fastest debt tool that we can get, like quickly, within a week, within 2 weeks. HELOCs are usually like a whole month sometimes, based on all the families that I've been talking to, about a month. Okay. Let's see, been velocity banking for 1.5 years via $34,000 HELOC, paid down 30K so far. Just got a $10,000 personal line of credit yesterday in case my HELOC is frozen in downturn that's coming. Hey, I agree with you on that. That's a nice little safety, net right there. I'm cool with that. Might as well, right? Whenever you build credit, use it, credit score drops, okay? And then you do velocity banking, credit score comes up, use it, get a HELOC, get a this, get a that, get a big old credit card with a huge limit on it. Boom, keep going, credit score goes down. Credit is always going to be doing this. Your credit score is always going to be going this, up and down, up and down, up and down. As long as you use your stuff properly, as long as you focus on creating assets for yourself, right? Because like I said, the line of credit, HELOCs, things like that, they become obsolete once you're debt free. So now you have to find a new purpose for them. Is okay, once I'm debt free, does it make sense to keep pulling from a line of credit to pay bills? No. Why would you pay interest to borrow money, right? To pay bills? That doesn't make any sense at all. So you have to give it a new purpose. The new purpose would be to invest, acquire assets, get a business going. Let's increase our knowledge and our wisdom. Let's build relationships within this community and keep things rocking and rolling. Would you agree? By the way, thank you, Oakland and Leon. They just gave They just gave some money. So thank you for that. I appreciate your support. I really do. I think it's awesome that everyone is literally in this community has given almost something, whether it's your time, financial, you've given me a referral, you've brought me more subscribers. I mean, I love it. I really do. It's like you guys are you're manifesting everything that you want. You're manifesting it here. And it's showing as we keep progressing. Right? As we keep progressing. I love it. I can go on all day. Let's see. When you make a big or small purchase on your credit card and pay it right away, then how can you report activity? Okay. Again, I don't care about that. Like, I do that all the time. I throw purchases on my credit card and I just pay myself right back. My credit is not being harmed. I don't know. I don't know what people say about, it's good to show a balance due and all that. I'm like, yo, I don't want to pay interest ever. I don't want to pay interest for the sake of building credit. Why would I do that when I can do this and just create money out of thin air and just keep creating money like the banks do? So questions like that, I don't have a definite answer when it comes to, the reporting dates and the credit bureaus, because every bureau is different on how they report your stuff. Okay, it's all different. The credit card companies are different when they actually submit to Experian, TransUnion, Equifax. When you try to get all those little details, you're going to get lost in the clouds, so to speak. You're just going to get lost because everyone, let me tell you, every credit person out there is going to have an opinion, right? And not to say that this one's right, that one's wrong, this one's right, that one's wrong. Listen, velocity banking's that foundation. Doesn't change. It's like, hey, just do this and we'll get the results that we want. Get the results that we want. Okay. Mr. Cashflow Pro says DTI, try to keep it under 33%. You can usually get something as long as it's under 50% through, just not ideal. Hey, that's a safe thing to say. Yep, Joel says, easy to be a cheerful giver when you're debt-free. You are certainly right, But the real challenge is when you're actually in the weeds. When you're in the weeds, all right, is when I think is really determined where your heart is. All right, I've been really doing a lot of research on, this whole giving concept, because that's something I like to really take hold of on this channel. It's like, yeah, we want to get our money right, but we gotta give, man. We gotta give to people. You gotta help your neighbor. You gotta tell them, yo, you in debt? Listen, let's have a dinner and let's watch like 3 videos of this guy. Okay. He's gonna get us right. All right. You just however you can do. Keep giving, man. Never stop giving. What I've noticed is that when I give, man, I mean, you see it right here. See, I never had money before. Did you know that? Like never. Like I never held more than like 2 grand in my hand in cash. Like never. Okay. When you come from when you come from not much, I think there's certain people that can relate to me here. That it's like when you know how to stretch a dollar, boy. Whoa, I tell you, it's incredible what we can make happen. So let me answer a couple more questions. Let's see. You can negotiate with your employer to do anything with your insurance policy if it doesn't fall on the ERISA, so they don't have to treat all employees equally. If you can negotiate it, do it. Yeah, I think you're referring to boxing question. Can employers match how much you put into your life insurance policy? I believe that's a yes. But mind you, I'm not sure if these employers are doing what we're doing, you know, the banking concept. Okay? I don't know if they're doing this where we're maxing on cash value because they're trying to give you death benefit. So I don't know. So we want to max on cash and minimize on premium. All right, that's the whole concept right there. Maximize on cash, minimize on premium, and you create a really, really nice asset to go along with. Let me see. Let me answer some more questions here. All right. Albert says, I tried pushing my due date on credit card, but the closing date also moves forward. How can I have the due date after the close? No, 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 no. You're not pushing the due date itself. I didn't tell you that. I'm telling you, we have bills that are due certain times in the month. Your phone bill, your gas, your electric, your things like that. I'm telling you, change the due date on those things to match with your credit card, right? The credit card due date, it is what it is. If you want to try and change the credit card due date, the closing date will change with it. Okay? Understand that with all credit cards, the closing date is always after the due date. It's never before. That doesn't make sense. The closing date, the purpose of the closing date is to let you know when the next bill is going to be sent to your house. Okay? And when that next bill is sent, that's an indication that, oh, I can start using my credit card because it ain't going to show on next month's bill. So that buys me some time. I hope I'm clear on there, man. Come on, we had a lot of conversations. We got to, come on now. Come on now. Let's see, Juanita. I have been offered a credit card but don't really need it now. Is it wise to get it and have it on hold? If you don't need it, why are you getting it? That's my opinion. If you don't need it, I don't need it. If it ain't going to help me to help you to pay off debt and get where we need to get to, hey, let it be. Trust me, you're going to get offers after offers after offers when it comes to, this concept. Okay? Let's see. Activity doesn't improve your credit score. That's false. Activity does improve your credit score. A balance negatively affects your score and no balance is the positive. If you have two credit cards or more by the same credit card holder, you can dump all those funds into one credit card, boom, higher credit limit. Oh, I didn't know that. So you're telling me, Mr. Ken, brethren, are you telling me that this Bank of America credit card and this Bank of America credit card, I can combine them and make them one and get a higher credit limit and potentially extend my 0% offer? Is that what you're telling me? Because if I can do that, I'm going to go do my homework and I'm going to find out about that because that might be pretty interesting to do. Okay, Billy says, after June, I will be debt free. Me too. Besides my wife and my student loans, but my DTI will be over 50% with these loans. Loans will be forgiven in 10 years. What do I do if I can't get a line of credit with my DTI? If you can't get a line of credit, what do I always say? We got the credit cards. Use the credit cards, build your score, all right? Build your credit score, all right? That leads me into next thing. Like everyone's always asking, like, yo, I can't get a line of credit. I can't get a line of credit, right? That has to do with the economy, right? When it comes to lines of credit being given out, because Let me tell you, getting a line of credit is not a walk in the park. It's not that easy. It takes some time. You've got to analyze it. You got to make sure it's the right tool that we're getting. All right. You got to make sure it's exactly what we want. And the way that I do that is I educate myself. All right. I got a guy that does credit building on the business side, and also on the personal as well. And I would highly recommend them. And I'll you know, if anyone wants that information in terms of, you know, building credit, things like that, that you're willing to actually like pay for and you know, get the investment service, hey, cool. The do it yourself strategy is going to take some time. Okay, it's going to take some time. You got to be patient, right? If you apply for a line of credit, you get denied, be patient. Use your credit cards, do velocity banking with your credit cards. Get your money right, get your cash flow game up. Try to increase your income over the next 6 months. Okay? Try to get inquiries removed. All right, you can like I said, you can pay someone, all right? Cuz in some situations it's like, yo, you want to get your credit like that, you need to pay someone to get your credit right. Who do you trust? Ah, that's the question. Right? Who do you trust to get your credit right? Cuz boy, there's like a credit repair guy on every block, on every corner, and they're just selling like a program that's like a do it yourself. I hate those. I hate those. I just want something that I can pay you and you do it, right? And then we get results. I don't want no freaking do it myself, because I can do it myself and just not pay anyone just by doing velocity banking. All right, let's see. A couple more questions. I'm going to wrap things up. If there's anything you think I missed, please point it out. You know, we talked about ultra FICO today. We talked about, you know, the future of velocity banking. I don't think it's going to go nowhere. It's pretty solid. In terms of like a mass amount of people doing velocity banking, listen, that would make the economy wonderful if everyone managed their money right, which is very hard to do. Okay. But if everyone managed their money right, wow. Not only would you be borrowing wisely, right? Like borrowing, let me tell you, it's as old as Pharaoh. All right. God spoke about it. Jesus spoke about it. All right. All the preachers spoke about it. All the kingdoms back then, they practice it. You know the story that talks about the three men, right? Each were given talents, right? One was given 5, the other one was given 2, the other one was given 1. All right. The guy with 5 talents went out and made it double. Who did he give his talents to? Right? So he lent his talents to someone, right? So let's say I give you 5 of my talents and you apply the talents into your household and you come back with 10 talents. You were the borrower, I was the lender. We both got a win-win. Yes? A win-win. Not bad. That's pretty exciting. And then the other guy with 2 talents did the same thing. With the resources that they had, they went from 2 to 4, right? But then this piggy right here, man, the one with 1 talent decided to dig a hole, and stuff it. Not to be offensive, but a lot of times that's Dave Ramsey thinking, is to, you know, don't spend no money, don't spend no money, don't save, no, don't do nothing, wait for the rapture. Come on, man, you taking people a wrong route, bro. You know, a lot of other people that I hear talk about finance, you know, I went to a seminar recently, and that's what they were talking about, you know, cutting expenses and like conserving, you know, not being a human being. I'm like, that doesn't make sense. When I was making 2,200 a month, my expenses were like somewhere around 1,500. Now, what Uncle G says is when your income goes up, right? you should be investing, right? So that's an expense and it goes up, but it multiplies the money. So you never want to like plateau. You want to keep growing, right? Let's keep growing all together. Let's keep growing. All right, my computer is about to die. It's been about an hour. All right, I'm going to answer a couple more questions here. And let's see. What's up, Denzel? When I become debt free, can I begin the life insurance policy? Yes. Okay. I'm gonna comment all the information, links. All right. You guys can reach out to me, you can email me. All right. You can join my Patreon page. You can set up a consultation. We can talk business. All right. Let's see. Focus on adding positive data to your life. Oh yeah. Brother Ken says, yes, I did it with Chase. All right, so I'm going to look into that, my friend. All right. Start building your policy's cash value, Mr. Walter says, and you can borrow from it. That's how you become your own bank. There you go. There you go. All right, everyone. I really liked the interaction here today. We are going to, on my next live stream, I'm going to do another real scenario. We're going to answer questions. We're just going to keep this thing rocking and rolling. We don't stop. We keep going. All right. Have yourself a wonderful day. God bless. Tuning out. Like I said, reach out to me. Got my email, denzel@builder2contributor.com. All right. If you want to submit your questions or go to my website, denzelrodriguez.com. You can contact me. Can work together on solving this, getting all our money right. All right. Have a wonderful day. Establish your kingdom authority. Let's keep going. All right. Bye.